let's prove it. Let's get it through a first decent recession. Now, you guys have done that where you've traded bear markets where the equity market goes down and stays down, and actually the Fed saves you. They try to save you and eventually comes back, right? That's changed. That's what I think we're going to come through. Now, obviously I'm focused on the macro here. Is we have to get through that period. I think the Fed says it too. They know they want to cut that umbilical cord. Well, all that matters is that every time the stock market goes down, we cut rates and everybody's happy. It's got to get through that period. And that's what I think we're going to be seeing in 6 months, in the next 12 months. Bitcoin's going to do that.
Mike McGlone is a prominent financial analyst and strategist known for his expertise in commodities, cryptocurrencies, and macroeconomic trends. With years of experience in the financial industry, McGlone has gained recognition for his insightful market analysis and predictions. During the interview, Mike McGlone discussed about the impact of macroeconomics on Bitcoin and other cryptocurrencies. He believes that the approval of a Bitcoin ETF within the next 3 months could lead to a bullish trend in the cryptocurrency market. At present, crypto investors are highly confident with the Bitcoin investment as BlackRock is very near to getting regulatory approval from the US SEC for its Bitcoin spot ETF application. And also 4 other assets managers filed for Bitcoin spot ETFs applications with the SEC agency. While hoping for a Bitcoin ETF approval and a continued bullish stock market, he also anticipates an upcoming recession due to poor macroeconomic conditions. In response to the recent Bitcoin ETF-inspired rally, McGlone said physical Bitcoin ETFs in the U.S. are a matter of time, we believe. BlackRock's application to start such a fund appears to have expedited this process, but a launch may not come in 2023, and Bloomberg Economics expects the U.S. to tilt toward recession in coming months. In his tweet, McGlone mentioned several bullish drivers that allowed the flagship cryptocurrency to recapture the $30,000 level and are holding Bitcoin there at the moment. Among those are the federal funds futures, NASDAQ Composite Index rising, and the potential launch of several Bitcoin ETFs, including BlackRock. Still, the expert wrote, there are bearish factors that are likely to overcome the bullish ones and may create headwinds for Bitcoin's further rise toward the $40,000 price level. Mike McGlone discusses the comments made by Jerome Powell, the chairman of the Federal Reserve, regarding the expectation of further interest rate hikes. As Jerome Powell said in prepared remarks for testimony he delivered to the House Financial Services Committee, nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. We will now bring you clips of Mike McGlone from Scott Melker's show. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
Now we have this situation. Well, maybe in the next 3 months they'll approve a Bitcoin ETF. Is that why we're all bullish? And I think that's what I have to sit there and think, okay, that's an if statement. No one has any clue when it might happen. We all know at some point there's going to be ETFs in this country where you can track a broad index of cryptos, physical cryptos. That's just a matter of time. And then, of course, people who want to volunteer in history to go back down in history as Aaron Burrs of history, fine. We've seen some of those people. That's fine because this technology is overwhelming. I can fully get that. But to me, the macro is just, if you saw what we all saw what he said last week. We saw what he did, the Bank of England, the Bank of Canada. I mean, this is a classic historical case of the rug pull and liquidity. Now, I have to admit, this weekend I went back and read about 100 years more of history of the crashes, and almost every single time it just reiterates my views. First of all, you pump things too much, and then you dump things too much. And then, so we have to be hoping, let's see, to be bullish Bitcoin here, obviously we have to hope for that ETF soon. Okay, maybe we'll get that. We have to hope for the stock market, bull market to continue. Maybe we'll get that, but I fully expect a recession soon. That's just not my view. Look at commodities are collapsing. Look at the inverted yield curve. It's doing it more today. You've seen the 10-year note yield ticking down this morning. And it's just the bottom line of liquidity. The Fed is still pulling that, still raising rates, pulling that liquidity. So the macro is very poor. And I don't like to be bullish on hope. I like to be bullish on facts. So I think what's going to happen, my base case is we're going to tilt back into this normal bear market for a typical recession where stock market goes down. I'm sorry to say that's just the way it's usually happened in history. People just forget what happened in the last 10 years. They have been able to buy every dip when the Fed was zero. That's what Chairman Powell said last week. He said, we're not going to be there. We're raising rates, yet we know there's a lot of signs of slowing down. And there's no sign of that, of cutting rates. It's not just the Fed. It's virtually every central bank with the exception of one key one, China. China's a country that backed Russia. Well, the unlimited friendship, we all know that's failing. So I see this is, I'll end with this. To me, these are all the iterations of part of what I see as a significant economic reset. By the end of this year, it's going to come clear. And if Bitcoin can get out of this and beat an equity market on the way up, that would be great. If it can beat an equity market on the way down, that would be even better. I think that's where we're going in the long term. But right now, I see it as gold and long bonds are the most likely to do well. No. Just want to point out, we mentioned BitTo. I'll just turn a little bit. If you want to see a good island bottom chart and something that's Bitcoin related, GBTC. Just spend a little more time here. Now there's a nice chart. And I also look at that as if this ETF happens, we know that premium, that discount is still about 31%, pretty much is likely to go to zero, just a matter of time. So I look at risk reward. I can't make trade recommendations, but I can't trade either. I'm not allowed, which is probably keeps me neutral. Is that to me, there's a bottom formation to me, and that's also, it's got that, it can still ride out a 30% collapse, and I mean, still has that the premium that can help support that price.
About this, so that's what we're talking about right there. Yep.
Yeah, I look at some of the smart money might be going in. And okay, now we knew it was wide at 50. Now it's maybe, is it still wide at 30? But there's a good solid reason for it to narrow, and particularly if BlackRock helps.
During the interview, Mike McGlone discussed the performance of Bitcoin over the past 3 years in relation to the stock market. He explains that recently stock market is showing more significant gains compared to Bitcoin. McGlone mentions that the current level of Bitcoin being similar to that of 2017 in relation to the Nasdaq, but it needs to demonstrate divergent strength and outperform the stock market. He emphasized the need for Bitcoin to establish itself as a risk-off asset during market downturns. Moreover, he believes the U.S. Federal Reserve continuing interest rate hikes this year, weak U.S. dollar liquidity, and Nasdaq 100 stock index reaching its peak are major obstacles to the upcoming Bitcoin rally. He noted that while Bitcoin still holds promise in the long term.
Let's back over into the big picture. The last 3 years, Bitcoin has basically gone up with the stock market. First it went down, and then went up, back down, and now the stock market is going up a lot more than Bitcoin's going up. Okay, maybe Bitcoin's going to catch up. So we have to point out the fact is since 2017, the Bitcoin's first reached this current level versus the Nasdaq, it's still at that same level. So I completely agree with what you said, Dave, and what you're doing, James. In the big picture, this is going to revolutionize. It's the digital world. It's digital gold and digital world, but show me the beat. It's got to show that divergent strength when the market's going up. It's right now, it's like on the year, it's up dollar. I mean, it's the volatility weighted up about as much as it should be versus Nasdaq. It basically takes 2 to 3 vol versus the Nasdaq. Okay, great. It's done what it's supposed to do. Yet the last few months it's been underperforming for stupid reasons, right? Maybe we'll get that ETF. That's my point, is you got to get the big picture trend. Is this going to be a little different than the last 12 years where every single time the stock market goes up, the Fed's going to save you? No, it's going to be different. We know that's going to be the case. The Fed's told us. We see it. So we have to get through that period. Is this early days of it? I think it is. And I just need to see that indication that when the stock market goes down, this is going to be more of a risk-off asset. And that's the point. It hasn't happened, and still on the year, maybe it's catching up, but just certainly the last Q2, because of these reasons, it's just trading poorly. And we need to see that. And I look at the macro as it's still the fastest horse in the race. But one thing we have to point out is a lot of the people who are the most bullish Bitcoin are the people who keep telling me the same thing I've heard for 5 years. I've been part of it. Institutions are coming. Institutions are coming. Institutions are coming. Great. I agree with that. It's coming. It's all coming. But we're still hearing the same thing. We've been just kind of get immune to it after a while. BitTo is a tremendous commission generator, but it also did one key thing that we fully expected. It harnessed that cash and carry trade that brought Bitcoin into the mainstream. And now what's volatility doing in Bitcoin? I just know people, hedge funds, have been going and buying like grayscale, sign some of the futures and saying thank you. I mean, that's just what it's happening. So to me, it's getting there.
It's a tool.
But it's a tool. But that's why I want to see it as here's my outlook. I think that we're far from a low in the stock market. Just like I said in the commodity market a year ago, we are far from a low in the commodity market. A key question I ask people is, what stops this bear market? Now, this is a bear market in commodities. It's a bull market in the stock market. That's very rare, unless we have a big deflation environment, the Fed's easy and everything's fine. They're not doing that. So to me, everything's going to tilt over that way. And then the question is, what stops it? So I think we're going to be at a point where in the near future, maybe it's 12 months, maybe it's 6 months, we're going to, the whole consensus that the worst is over and the stock market's going to get a good reality check that you too have traded in your lifetimes where, yes, there's periods where stock markets make highs and they don't make that a high again for another 15 years. NASDAQ 2000. This is, and S&P 500. And then, of course, these things are, it's this, I've just gone back and keep testing my measure and my history of cycles. This cycle right now, the worst I've ever seen for a pump and liquidity and a dump. And also you put the narrative, and where I'm sure James is all over as a hedge fund guys, okay, what's my value, risk adjusted value to put on the positions here? Now that this NASDAQ has completely told me we're going to break out. We've already done it, and it's different this time, and the stock market's going to keep going higher despite the Fed tightening. It's already done it, a lot of it. So what's my value versus maybe the pendulum just swings back towards the bear market?
The recent trend has shown the stock market outperforming Bitcoin, raising the need for Bitcoin to demonstrate divergent strength and establish itself as a risk-off asset during market downturns. CoinGate Media also reported that the Bitcoin CME gap between $34,455 and $35,180 is about to get filled. As we navigate through these uncertain times, it is crucial to consider how Bitcoin will navigate through this unpredictable time. How will Bitcoin navigate the upcoming recession and market fluctuations? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.